So now we are on the next topic, which is basically finding out the option Greeks, how to read option data, and how to trade, in stocks based on StockPro setup, right? So let's go first to the option Greek. And where do we get the option Greek? It's the same place, which is Zerodha here. So this is option Greek. These are option Greeks. So, there are, four major option Greeks that you need to know. The first one is delta, which is which measures. See, I hope you all know that the futures and options are called the derivative. Derivative means rate of change of a quantity. That means when the strike price changes, underlying price changes, not the strike price, the underlying price changes, then the options will change, right? In what way they will change? Those are defined by delta, gamma, vega, and theta. So what is delta? Delta measures the rate of change of options premium based on the directional movement of the underlying, right? Let me explain you over here what does it really mean. For example, Jet Airways is falling down, right? So the directional move in the downward direction, right? There is no momentum happening here. If you can see this place, let me just remove Ichimoku so that you can see it more clearly. Now see here at this place, there is not much of momentum happening, right? Now what will happen? Delta will actually give you the options will not move at all, right? Let's see through the looking into the NSE website, and this is the month of April, and let's see what is here. So what is the range of stock here? This is Jet Airways. This range of the stock is between 600 to 650, right? Now let's say see what's happening in the month of May. What's happening in the 2000? I'm going to make it Jet Airways. Here, and the year is going to be 2018. And this is going to be, you can look at anything, call or put. Put, if I'm taking, I'm going to take it 600 put, and time period I'm going to take as April 2018, and I'm going to take the entire month of April starting from this date till 2017. Instead of it will be 18, and the month is going to be April, and I'm going to take the last day of expiry, and I'm going to see what's happening into it. 600 put, right? So what's happening? Why there are so many of it? 2nd April 2018. How much data is there? Jet Airways. So it's I need only one strike price. I need to select expiry. That is going to be 26th of this, and get data. So see here, this is the data, right? So 27 rupees, the put was at 27 rupees, it expired worthless, 190 rupees, end of the month. Now I'm going to look into the call, what is happening to the call, and the strike price I'm going to take as 640, right? And I'm going to see for the same period what's happening. So the call was at 17 rupees, but that also expired worthless, in between whatever may happen. From 17 it went to 23, etc., etc., but end of the month it just expired worthless, right? So the people who have lots of money, like FIs and DIs, they actually work out. They work out and figure out what could be the range of the stock, right? And they eat up actually. The delta is not going to work. Delta means there is no directional movement. But at the same time, if you see the month of May, right, there's a huge momentum in the Jet Airways. You can see from 642 it has become 430. And from when to when? 2nd May till yesterday, 15th May. Let's see what's happening in the month of May. I'm going to take the expiry of May, and I'm going to take the option put option, and I'm going to take the strike price of, let's say, 500. I'm going to see what's happening in It's put option. So I'm, instead of May, April, I'm going to take May. Starting from the first day of May till the last day of May, till the 15th of May, I want to see what's happening. So see here how it has moved. From 24 rupees, it has become 62 rupees, right? It depends upon the direct. Oh, sorry, 5 rupee 80 paisa. It has become 62.55. Means about 12 times higher. The money has grown 12 times higher. So what I'm trying to tell you here, the rate of change is faster here. So the delta will be very, very high, right? So this is basically, let me just read it. Measure of the rate of change of option premium based on the directional movement of the underlying. So if the directional movement is fast, delta will be high and you will be able to collect good premium. But if there is no directional movement, delta will be not working. Gamma. Gamma is the rate of change of delta. So here gamma will also be high, delta will also be high. If you understand the language of science, gamma is basically rate of change of distance, which is called velocity, and gamma is delta is basically rate of change of distance. If I take my strike price as distance, then the rate of change of distance is basically delta, but rate of change of distance, which is called rate of change of velocity, is called the gamma. How fast the stock has gone down, that's called gamma. And vega is the rate of change of premium based on change in volatility, and theta is the measure or impact on the premium based on the time left for expiry. So remember, when there is nothing happening in the stock, theta is still working, right? Theta is still working. Theta is making the price go down, right? Slowly, gradually. So suppose, like we are, let's say the premium I was showing you here, beginning of the month, if I take the call premium here instead of put, I'm going to take the call. So the premium on the call is 101 rupee 55 paisa. But every day, this is, either you buy the put or you sell the call. You are selling the call of 500 rupees. I can sell the call of 600 rupees also if I want, but the premium collected will be lesser. Because I believe market is not going to go above 600 rupees, so I can sell the premium, this call, right? 32 rupees 75 paisa. Now what's going to happen? Which day am I selling? 2nd of May. How many days left for expiry? Good about another 20 trading sessions. So this 32 rupees will decay with this, even if there is no movement happening or the price is not going up, then this will keep on decaying. Of course, when the price is going down, the decay will be faster. But if suppose there is nothing happening in this region, when there is nothing happening, if I sell the call, what will happen? The premium will keep decaying every day. Why? Because that is due to theta. Theta is basically the time decay. If there are 20 days left and 110 is rupees, 110 is basically the premium, then 1 rupee or 2 rupee will decay every single day. That is called theta. Theta works best when you are closer to the expiry. You can see very, very quickly the money becomes zero, right? Suppose many people trade very, very close to expiry. I can show you some other month. Let's see the month of April again. I'm going to show you the month of April again, and look at the 600 call only I'm looking at, and I'm going to make it month of April now from the beginning of the month, and let's see what's happening at the end of the month here and get data. So see here, the premium of the call was 33 rupees, right? And where did it close? Where did it close? It went up till about 50 rupees also, but then it closed at last settled price, last traded price was 1940, right? Why? Because where did Jet Airways close? In the last month, last trading day, which was 25th, it was roughly about 620. So 600 was our strike price, if you see here, plus whatever above 600 it closed, that was the premium one will receive. But let me take up a strike price of 620. Then let's see what's happening to the data. Now see here, We sold it at 24 rupees, but end of the day, on the last day of expiry, it closed, the last traded price was 15 paisa only. Why? Because the price could not reach 620. See here, the price where the market closed on the last day of expiry was, what was the expiry day? 26th April. 26th April, where was it? It was at this place only. See here, this was 26th of April. The stock was basically closed at 621 or 622. So the option expired worthless, right? So what I'm trying to tell you from here is that there are two ways to trade in options. One is that you buy the put. The other thing is you sell the you buy the option or you sell the option. When you buy the option, you will have to pay the premium, and the money spent will be lesser. But when you are buying the options, when you are selling the options, the money needed will be higher. Money needed will be higher, but you are sure about one thing, that the delta is working, theta is working for you. Even if the stock is not working, the theta is working for you. But you need a lot of conviction, and you need a lot of, uh, understanding of the options. And I'm not teaching you that here. I'm just giving you a brief overview. So what has happened, most of the FIIs and DIIs use theta in their favor, and they've defined the boundaries of the stock, or they define the boundaries of the Nifty, or I mean every stock. So let's see, this is today's 16th of May. I'm going to just refresh it. Looking at the data, I will tell you the boundaries that FIIs and DIIs have built for it, right? For the Nifty. So see here, the highest open interest is at this point. Means this Nifty cannot cross 11,000 in the month of May. That is for something for sure, right? What is the latest traded price? 1760, right? And what is the bottom that they have defined for Nifty? The bottom is defined as 10,500, because that is where the highest put option has been open interest is. I hope I'm making sense, right? So you have to see where is beginning of the month, where is the highest boundary, highest standing open interest. So for us, the boundary is 11,000 at the top side, and the lower side it's 10,500. The Nifty is not going to go above 11,000 and not going to go below 10,500, right? Now, what happens, because every day the dynamics keep changing, every day the dynamics of the market keep changing, so there is change in the OI. You can see here the change in the OI, and that gives you an idea about the momentum that this stock may be having. So if you see here, there is unwinding happening. People must have sold puts, now they are unwinding. When you sell the put, means what? You believe that the market will not go down. But when you get that, when you believe the put value has gone up, look at this put value has gone up by today by net change. There is a 12 rupees 75 paisa change. So they are unwinding their positions. Those who have sold puts, now they are buying back. Minus sign indicates that they are buying back. Can you see here? This minus sign indicates that they are buying back this put. At the same time, they are writing calls here. Writing means they believe that the market, or let me show you here. At this point, you can see the huge call writing happening. That means in today's date, the market will not go above 10,800. They have sold it. They have sold this option, and they have collected the premium. Where did they sell it? Latest traded price is 79.60, and they've already collected 32 rupees. Let me just show you 10,800 call. Let's see what's happening in the 10,800 call. Let me take 11,000 call, right? Now today, I'm going to make it 15 minutes. So if you see here, what's happening? The call was at 20 rupees, right? From 20 rupees, it has touched a bottom of 13 rupees as well, right? Now, a bit of buying is coming in Nifty, like Nifty yesterday, like see here, they must have sold calls on this day, which is yesterday. They must have sold calls yesterday at this point. Can you see the selling had come in the calls? So from 68 rupees or 69 rupees, it has come down today to 13 rupees. They sold one lot and booked their profit at this point, right? So this is how they sell the call. Okay, so what I want to tell you here, that they have already collected today's premium, right? That is why you see a bit of unwinding happening. I mean, there is not much of open interest today here. They're unwinding, they're booking their profits back, right? Because they've collected good amount of money today by buying it back. Okay, so yesterday the same call was trading at 69 rupees. Today it was trading at 17.60, means wherever it closed yesterday, even it went below about 11 rupees from there, right? This is Nifty call. So how do you read the option data? You have to see where is the highest open interest, right? This doesn't change much. In the first column here and the last column here, they don't change fast. So you need to know in the beginning what are the boundaries of the Nifty that the FIs and DIs have decided, right? So 11,000 in the upside and bottom side it is 11,500. Now if you want to see what's happening in the every day, you have to read the dynamics. You keep refreshing it and see here now. It is, now your strike price has changed. Nifty has come to 10,750. So you can see highest option writing here. Change in the open interest here means Nifty will not go above 10,800 today. And there's an unwinding happening here, right? And there is not very much put writing happening, means there is probability of Nifty to fall from this place. There is a probability that Nifty may fall from this place. All right. So option data gives you a lot of idea what's happening. So let me show you some data. Let's say TCS, right? TCS looks in uptrend. TCS definitely looks into uptrend, right? You can see here. Let's go and look into its option data and see what's happening. Now see, there is a highest option writing here, means the boundary for TCS is 3,500. What is the price right now? 3,493, and that is why you see there is not much of momentum happening in TCS, right? So the option data tells you what is the boundary of a particular stock. So the here boundary, you can see 432 contracts have been written at 3,500, right? So this is the top boundary of TCS, and if it crosses that, then you see the highest number of option writing happening at 3,600. So what does it simply mean? Mostly FIs do this. They have sold 3,600 call, latest traded price 30 rupees, and they will collect the premium once if it doesn't crosses 3,600. So according to them, the boundary is 3,600 on the upside, and the lower side the boundary is 3,400, right? Now what will happen? Now even if they have done this, there is a possibility a news comes in and the TCS stocks just goes up and up and up till 3,700, right? What will happen? These guys who have sold, this premium of 31 rupees will become 60 rupees. They will not exit their trade with losses. Remember that. What will they do? They have cash stock with them. They've bought the cash stock and they are hedging their portfolio with the options. So they will sell in the open market their TCS stock and bring the price below 3,600. They will ensure that this money becomes zero and they exit their position by having good profits. So you understand, they will manipulate the market. You have to be extremely careful because we have no strength when it comes to FIs and DIs. I hope I'm making sense. So they have put the boundary at 3,600. Suppose by any chance news comes in, something happens, and the stock suddenly goes to 3,700 or 3,650, this call price will change. Now, when the call price is going to change, they are not going to exit it. They already hold cash stock of TCS. What will they do? They will sell TCS in the open market and bring the price well below 3,600, right? They will sell below it, well below 3,600, and bring it down to below 3,600, and then only they will allow people. I mean, once they close their call, then only they will be able to allow exit to. I mean, that's how they will make sure that they don't end up in losses, right? So this is how market is manipulated. You have to be careful about it when you sell the call, or when you selling the call is actually more safe, because it is these guys who will ensure that the price, the call should, they should not exit the call with losses at the end of the month or anywhere in between. Okay, so call unwinding and call writing helps you a lot. Call unwinding and call writing helps you a lot in understanding the boundary of the market, boundary of the stock, and by trading into it. So this is how you read the option data. Let's look into some other option data. I can tell you Jet Airways. Let's look into the Jet Airways option data. Jet Airways. So see here, the highest option writing is happening at this 600. Means they believe that it's not going to cross 600 no matter what, right? Even at the higher levels, you can see 640, 660. There is option writing happening. I mean, they must have written it long back, and the price has now come down to 75 paisa. They will just unwind. See this minus sign? They're exiting because they don't want to, invest, remain, block their huge amount of money. Now they must have sold it long back, right? You want to see the where they have sold the 640 call. Let's see how does it look like in the month of April. Jet Airways call, and which call was it? We are looking at, this is 640 call. Let's see how it has changed. 640 call, and the month is going to be now May, and starting from the May month till the end of the month, because they're going to create their position in the beginning itself. And this is I mean, today we are on 16th, right? Let's see, get the data till today. So see here, where did they sell it? They sold it at 18 rupees 65 paisa, right? It's a good amount of premium that they will be able to collect, right? Today it is, they must have exited here 190. They must have exited, right? Because they don't want to, I mean, 18, they've collected good about 16 rupees here, and it doesn't really, they wouldn't like to hold their positions. That is why they must have exited Jet Airways 2 days back itself. 2 days back itself, look at Jet Airways. So they must have exited their positions long back, right? Call options must have become zero for them, right? So what I'm trying to tell you here is that selling call is always very, very safe, because theta works in your direction. Time decay and delta is also working because the price is going down. All of them are working in your favor, and you are sure about that money will come into your pocket, right? So this is called option writing, and what I'm trying to tell you here is that this unwinding that you see at these levels, they are just exiting their position, right? It has no significance. Let's look into some other stock. Maybe today Bank of Baroda, or which one had the high, very high? No. Let's see, where is something happening here. So let's short build up, right? DCB Bank, M&M Finance, Bajaj Finserv, Exide India, or let's see here, NIT Tech. Let's look into NIT Tech, what's happening over there. Oh, sorry. NIT Tech. Let's see what's happening in NIT Tech. So see NIT Tech, if you see here, the highest option writing is happening at this level, right? They believe the stock is not going to go above 1200 rupees, right? You want to see how the money has changed for NIT Tech at 1200 rupees. They must have sold it in the beginning of the month. So I'm going to change this into NIT Tech. And I'm taking the call. This I'm making as 1200. Same period. So where did they buy it? Right, where they must have sold it? 26 rupees. Right? Where is it? Where does it stand today? 15 yesterday. 6 rupees 95 paisa. Right? 20 points they have gained. Right? Although, look at the price of the stock. Look at the price, stock price. Stock price is heading up, right? But still it's nowhere close to 1200 rupees, right? Still it's nowhere close to 1200 rupees. And today, where is it trading? It's trading at 9 rupee 30 paisa. And definitely it will not be able to breach 1200 rupees. This 26.95 will become zero and the options will expire worthless. So this is called option writing, right? So many people who must have believed that the price is going to go up, taking this support, their money must have become zero, right? So there is a difference when you buy, where there's a difference when you sell. When you sell, you're almost certain that you will be gaining money, but when you buy, time decay, whatever is working in the favor of the sellers, that those factors will go against you, right? You need a huge momentum. So when you want to buy, always buy on support, always buy on support, the calls or resistance, you sell the options, and just keep your open positions only for a day or two, not more than that. Otherwise your entire premium will decay. This is something you have to remember, right? So if you're buying options, remember that the duration has to be very, very short. It cannot prolong at all. Otherwise, theta and theta will make your money become zero by the end of month, right? It'll just become zero, deplete it, and quickly and very fast it'll become zero, right? So this is about, the option data, how to read option data, what is the how, and then how do you trade in the setup. So I'm telling you, you always have to trade in stock pro setup by considering this support and the resistance, right? Or trade from the top and trade from the bottom. Now I'm going to show you a member's research. I have given this research work to all the members and they have done it. This is a member called Kunal Kumar. He's written that after filtering several stocks, I selected these 6 stocks. According to me, these stocks are very good for option trading. He says I also looked into, because I feel Tata Steel also gives a lot of momentum in the options, but it looked good for futures and equity because on normal days its volatility is low. If I am wrong, then please tell me a specified strategy of the Tata Steel options. In each file of stocks mentioned 2-3 trades which have given huge returns within few days, right? So let's look into them one after the other. This is, Kotak Mahindra Bank, right? It's state of support, and see here the call option, how the call option went from 6 rupees, it went up to 21.45, and then uh, this is, date from there are 3 trades he has given, 1, 2, 3 and 4. So this is first trade that's made the call from 6 rupees to 21.45, second trade from 10 rupee to 25 paisa, then 13 to 21 rupees, and then 5 to 9 rupees. All these trades have been given here, right? So I'm going to give you this file so that you can also understand. This is Reliance. Reliance is also one of the very, very volatile stock. Look at how the stocks, the options move, because this is the trade of support. You can see here, I mean, if you take a pen, you will be able to see this is a trade of support. And the options went from 12 rupee to 39 rupees, right? Just in few days. But you have to remember, trade only when the breakout is coming in the options. And this is the second trade that he has shown. This is the second trade. If from 8 rupees, it has even become 32 rupees, right? So that's the trade on Reliance. But you need to find such breakouts. This is VEDL, again a very, very volatile. Even Hindalco is very, very volatile. So the put has gone from 550 to 1195 or 17 also in between. And then the next trade is 440, the option, the stock has even gone to 1622 rupees, from 4 rupees to 16 rupees. Then the next one, it has gone from 835 to 28 rupees or even 2140 rupees. This is VEDL. Then next you have the Mindtree. Mindtree also has given you beautiful trades. The stock option has gone from 145 to even 7 rupees within a few days, and even 440. Means your money has become almost 3 times. Same here, this is another trade but identification of the trade has to be correct. Trade of support. Right. Similarly, out here, Apollo Tires, trade of support, and money has become almost double. Right. Money has become double. This is Ashoka Leyland, right, which has also given good returns. Good returns. Money has become double here and double here. So these are few stocks, but you can do your own research and figure out when the stocks are volatile, which stocks are volatile and which can give you good returns, right? But remember, how do you read the data? That is very, very important, right? Reading option data is very, very important. You have to see call writing, you have to see unwinding, and you have to see the dynamics of the stock, right? You have to see the dynamics of the stock. See here, I just refreshed it. This is NIT Tech. So this was 39,000. Now it has become 51,000. That means they believe that the NIT Tech may not go above this particular point. See here, tweezer top almost. So they're expecting price to come down. Okay. So hope it's a bit more clear, but I'm sure if you have a doubt, I'm going to take it up and I'm going to be helping you understand option a bit better. But I think it will need a lot of time and a lot of effort from your own side to understand options, right? So I have showed you how you trade based on support and the resistance. You have to go through the option Greeks. Options will take time, and understand, learn, watch videos, and that is how you will be able to create good trades in options. So with this, I'm closing up this one. I'm going on to the next slide. We'll meet next video.